I've backtested many Forex and gold strategies for this channel, but I've never touched the stock indexes, so let's have a look at the NASDAQ 100. Among stock traders, one popular seasonal filter is to enter on the first trading day of the month. Many believe that stocks have more impulsive moves on this day. IG has studied this phenomenon, whereby they tested a simple long-only strategy on the Dow Jones. This strategy opens a long position at the closing price of the last trading day of the month and closes it at the closing price at the end of the first trading day of the following month. Between 1998 and 2022, 20 of the 25 years turned a profit, with a net gain of over 10,000 points. So what's behind this first-day bullishness? According to academics, investors are more optimistic at the start of the month, and having just received their salaries, are hungry to enter the market. In addition, fund managers often window dress their portfolios, whereby they sell positions at the end of the month and reopen them the following month. Since the major U.S. stock indexes are highly correlated, will this bullishness be present in the NASDAQ as well? Let's find out. Once again, I'm going to code up a strategy template that contains this first day of the month filter, which is conveniently pre-programmed. Additional entry conditions, as well as the exits, will be determined by the genetic builder. For builder configuration, I will start with a strategy that trades in both directions. Of course, stock indexes are known to have a long bias. I will later test a long-only version of the strategy to see if it improves performance. I will use the maximum available NASDAQ data on the 30-minute time frame, giving us about 12.5 years from 2012 onwards. The last 20% will be used for out-of-sample testing. For my broker fusion markets, spreads are often under $1, with no commissions. I will use a spread of $1.50 to get a little buffer. Don't forget to add in the swaps. As usual, I'll add a Friday close. I prefer to be flat over the weekend. For filters, the minimum acceptable sample size will be smaller at 150, since the strategy only trades on one day of the month. And to make sure the strategy trades in both directions, these filters will ensure the trades in both directions will be at least a quarter of the total. Let's see how the genetic builder completed the strategy. Looks like an additional reflex entry condition was added. Developed by John Ehlers, the Reflex is essentially a detrended momentum oscillator with minimal lag. Its calculations are too much for my puny brain, so I'll just focus on application. I've included a link to Ehlers' paper in the description if you're interested. The Reflex is unbounded, with 0 acting as the neutral level. Since it's detrended, the Reflex hovers around 0 even in the presence of strong trends, unlike traditional momentum oscillators like the RSI, which stays above 50 for most of the uptrend. With its minimal lag, the Reflex is great at quickly identifying turning points. Therefore, this long condition lets us quickly enter the market when a bullish reversal is detected. ATR-based stop losses and trailing stops were added, along with a 24-hour time stop. Here are a couple of longs on the 1st of February, 2024, both of which were closed out by the trailing stop. Shorts are symmetrical, with the Reflex having to turn downwards. On the 3rd of June, 2024, we had 2 shorts, which were also closed out by the trailing stops, though only one made a profit. From 2012 to 2024, performance is solid with a 1.85 profit factor and return over drawdown of 17. The sample of 346 trades is larger than expected because the Reflex condition is pretty loose. The first half of the equity curve is mostly flat, with performance greatly picking up from 2018 onwards. Looking at a weekly NASDAQ chart over the years, this is probably due to the increased volatility in recent years. Looking at the trade analytics, we can confirm that trades were opened no later than the 4th calendar day of each month, so the first day of the month filter is working correctly. As expected, profits from longs greatly exceed the profits from shorts, giving credence to the belief that the first trading day is generally bullish. What if I allow the strategy to trade on any day of the month? Okay, we can agree that this first day filter does make a difference. So, can I improve performance by making this strategy long only? I removed the short side and redid the backtest. You lose about 22% of trades, with an improved profit factor and expectancy. Max drawdown actually increased though, leading to a significantly lower return over drawdown. Here's a comparison of both equity curves. In theory, the original strategy that trades in both directions should perform much better in a bear market, like what we had in 2022. But an equity curve comparison for 2022 shows that the long-only strategy only performed marginally worse. So it's hard to pinpoint where the synergy lies between the long and short sides. I'd still recommend the original strategy though, since you get more trades and more profit. One downside of the strategy is that it only trades about twice a month, so it's best traded as part of a diversified portfolio. The first-day filter should be effective at lowering inter-strategy correlations. For a gold strategy that uses the Reflex indicator, check the video at the top. To learn how StrategyQuant's genetic algorithm works, check the one at the bottom.